Hey folks, welcome back to the channel. A few months ago, I put out a video explaining my strategy on how to profit from the potential ATVI acquisition by Microsoft. And I said that instead of using the stock itself, I'm going to be using options. So I bought a butterfly call, which is kind of like a modified call ratio spread. And I put this trade back in April. The idea was by July 21st, which is the expiration date, my trade would be profitable as long as ATVI stock price remains below 95.5 on expiration date. And I thought it was pretty much a sure bet that that was going to be the case, because the only way the price would go over 95.5, my break-even point, is if another company comes in and tries to outbid Microsoft, which I did not think was going to be the case. I mean, there's always that risk, but I believed it was pretty small. And I would make a max return if ATVI stock price closed on July 21st at 92.50, but that was a long shot. In most likelihood, if this deal goes through, it would jump up to about 95. And if the deal falls, then the stock price would probably drop below 90. So someone recently commented if I can give an update on this, and I'm going to do that now because today is July 21st. So this is the final trading day of the week, and it is expiration date for this particular trade. So here is the trade itself. I've been holding this for the last few months. And if you want to see like why I put in this trade, my methodology, why I chose these strike prices, 90, 92.5, and 95, you can watch the previous video where I explain all of that. But just as a refresher, I bought the 90 call. I sold 2 of the 92.5 calls, and then because I didn't think I was going to make enough credit, I sold another 95 call. So all in all, I bought this strategy for about minus $1, as you can see here. And when you're buying something and it's a negative number, it means you're actually receiving a credit. So to obtain this position in the portfolio, I already collected $100. And right now this position is worth about $199. So if I sell this today before the market closes, before all these options expire, then I'll have another $199 credit plus the 99 from before. So that's about a $300 unrealized profit for now, which will turn into a realized profit as soon as I get rid of this. So I'm going to do that now because I don't want to wait until this expires. This $90 call is fine because the stock today is currently worth 92.04, but I don't want to be holding this stock as a long-term investment, at least not right now. So I'm just going to close my options positions. This is looking at the daily chart, by the way. And back in April, when I put in this trade somewhere around here, I mentioned I would make money on this trade. If the stock went down, it could go down to 0 and I would make money. It can go flat, I would make money. If it goes up a little bit, I would actually make the most money, like pretty much right now. But if it goes above 95.50, then I would start to lose money. But like I mentioned in the previous video, the balance of probabilities favor that the stock is not going to go above $95, at least by July 21st. And it looks like it's going to finish today at around $92 here. So looking at the profit and loss graph, $92 is right about here. So that's roughly going to be where my max return is, which is quite lucky for this trade because I was not expecting this, but I'm very glad that it worked out that way. So to close out my position, I'm going to open this up and see the details of each individual option here. You can see the 95 call is right now worth 0. That's the market price, obviously, because in order for this call to have any value, the stock has to go above $95 by the end of the day, and it doesn't look like it will. This is the daily chart. If I go to like a 5-minute chart, you can see $95 is all the way up here. So pretty much no chance of that today because it's got to go higher than the previous high back on July 17th. The end of the day would be right here where this blue line is. What about the 92.5 call? Well, that one has a little bit of extrinsic value, just 2.8 cents right now because the stock is at 92.04. So there is a chance that it can go up to 92.5 by the end of the day. Still a long shot. So I don't think it's worth it for me to close these positions simply because there's a fee to make transactions. So if I close these, I'll probably be charged like $1 or something. But if I take the risk of just letting them expire and this 92.5 call expires today on July 21st, and the stock remains below 92.5, then this value would drop to 0. Now the final call, this is the one I'm long. You can see the other two I'm short, -1, -2. So the 90 call I am long, and the current value, this is almost all intrinsic value. So I will right click on the 90 call and click on close, which will basically sell this call option, and I'm going to try to get maybe $2 for it.
Order filled.
Okay, it looks like the call got sold at $2. If I go to my trades here, we can see it's this one right here with a 63-cent commission. And that means I've broken up my 3 option strategy. So the 90 call got sold, and I'm holding on to these short calls, the 92.5s and the 95 here. In all likelihood, both of these will expire out of the money today, so I don't have to worry about them. But of course, I will be keeping an eye on this. There's 3 hours left in a trading session. So if Activision Blizzard goes up like 50 cents, then I might have to close out this position as well. But I'm not too worried. Even if the stock goes up to $93, I will be taking like a $50 loss on my 92.5 short call, but I'm pretty sure my 95 short call up there is going to be safe. So that wraps up the ratio spread option strategy. I actually got quite lucky over the last couple of weeks. There was some regulatory news over here, which makes the deal more possible to go through. And because of that, instead of the stock sitting down here at around the mid 80 level, there was a huge jump up to the $90 level. So instead of making like $79, if the stock were to close below 90 on expiration date, it was able to end in this high return area between $90 and $95. So I'm glad this strategy worked out. It could have not, but most likely, as I explained in the previous video, there's just such a small chance that another company would come and bid up the price even higher before the expiration date here. Now, the deal is still not done, so I'll have to look at where they are right now. Have the chances gotten better or worse? And maybe I'll put on a new trade. It could be another ratio spread like this. We'll have to see. But I'm pretty happy with this trade here that ended today. A nice $300 return, which is not bad because if you remember, the initial capital I put up was $5,000. So 300 divided by 5,000, that's a 6% return in like 3 months. Anyways, thanks a lot for watching. Good luck with your investments, and I'll talk to you in the next one.